Concerns over inflation and a potential recession drove economic headlines this year. New data shows consumer confidence is at a 5-month high in December as we head into the new year. So joining us now is Javier David. He's a CBS News contributor and a managing editor of business and markets at Axios. All right, dude, let's talk about inflation. That was the biggest concern amongst Americans this year. Where do we stand now, and what's the outlook for 2024?
Interestingly, the data that we got this morning had a nugget that a lot of people sort of missed, and that is the inflation gauge. Shows underlying inflation hitting 2%, and that 2%, wow, that's a magic number. That's actually the slowest in more than 3 years, and it reinforces this idea that next year is going to be sort of the thing that we've been waiting for, which is a Fed that is nominally more dovish, nominally more invested in rate cuts, even though they've taken pains over the last several days to kind of downplay a market that's really kind of run away with itself, and is really behaving as if it's pricing in rate cuts right away. It's not going to come right away, but it is coming. And that's in part because inflation has finally been corralled or tamed or normalized in a way that is less concerning to the central bank.
So, at the beginning of 2023, there were real concerns that at some point we would hit a recession. The Fed started, increasing rates and at an aggressive click. But then it just seemed like sort of every month we were defying the odds. People were still spending money, and it was hard to determine just what the outcome would be. But it seems like we might be heading towards a soft landing. So, I mean, I don't want to put it out into the universe and say, how are we able to avoid a recession? Because you know what happens when you do stuff like that.
So
I'm not doing that.
Don't do it.
Money gods. But how are we able to arrive at the place that we are now?
Well, honestly, it's the U.S. consumer. They keep spending. And in an economy that is 65, 70% consumer spending, you need consumers to feel comfortable continuing to do that. And whether they love this economy, and all the data shows that they kind of hate this economy and they're upset over inflation and upset over the Biden administration's handling of it, the central fact remains that people keep opening their wallets, they keep charging their credit cards, and that has kept us all afloat. That's what's kept the job market also defying expectations. We had thought that we were going to see a significant come down in the strength of the jobs market. We're ending the year still below 4%. That's nothing even remotely close to, recessionary. That's been a big story. People keep earning higher wages, and that's a good thing. There's a lot of reasons for cheer. And a big part of that is the U.S. consumer has basically saved the world by continuing to spend.
So the housing market experienced significant highs and lows in 2023, namely high interest rates and significantly low home sales. When might it, I guess the question is less when might it become more affordable to buy a home, but when might we see the balance shift? In other words, the supply along with demand being there? Because right now there's very little demand and there's not a lot of supply because people are not in a hurry to sell their homes.
No, nobody wants to sell your home and then be saddled with this high interest rate, right? Even though interest rates are going down, not compared to, if you bought a house 5 years ago.
That's right.
Yeah, that's the key. I think that, even though we've come off those really high levels, 7-8% in mortgage rates, you really need it to come down a little bit more appreciably, maybe in the 5-6%. We're now at 6%, but I'd say next year is going to be a real test for the housing market because if we believe that the Fed is going to cut rates at some point next year, that will start to sort of trickle into housing rates and, treasury rates, which both those two are intertwined. You really do need to see that come down for people to be comfortable taking on that debt. People are holding on to their homes primarily because we haven't had an appreciable drop in prices either. So it's not, people are just kind of sitting on the equity and saying, why do I need to sell? And so meanwhile, people that want to new houses just don't have the availability, and it's certainly not affordable.
The other thing that we covered a lot this year in terms of financial stuff were the crimes, especially these like disruptors, right? Like the founder of FTX, Binance didn't get a ton of attention because we were distracted by FTX. And basically, they're in the same bucket.
Yep.
And most recently, we've got, the recent fall of Nikola founder, Trevor Milton. For those who don't know Nikola, Nikola? I don't know. But it's an electric truck company that just basically turned out to be smoke and mirrors, essentially. What's your take on kind of the big financial crime headlines of the year?
In every sort of instance where you have a boom, there's always a bust. And when the bust happens, I think it was, Warren Buffett who had that great quote about when the tide washes out, you see who's been swimming without their trunks on. And in these instances, definitely SBF and CZ. SBF is definitely going to jail. It's still kind of up in the air what's going on with the head of Binance. But at the end of the day, there's been a clearing out of the miscreants. The bad actors have been sort of flushed out. In crypto's case, it's a very new sector, a very brand new thing. It's a good thing that all of these bad actors are now kind of like been isolated, and now you can start to see the embers of something new being birthed. And in crypto's case, you're seeing Bitcoin shoot up. There's a lot of excitement around the regulatory happenings. They're going to create an ETF. In a lot of ways, that's going to help draw retail investors back in. In Trevor Milton's case, EV is a really big thing, and that's not going anywhere. But it's a good thing that some of this, this sort of malfeasance has been washed out and exposed, because now there's room for growth, and there's room for people have been held accountable, and then B, people can start to believe again that it's something that they can, invest in. And is not some sort of Ponzi scheme or some sort of, there's no chicanery going on, in other words.
Javier, I think it's a really great point. I think as we were all watching the FTX headlines, like one of the questions was, is this finally like the end of crypto? That, this is a kind of like a Ponzi scheme, and now it's going to have an impact on the entire sector. But instead, what we saw was that the stronger cryptocurrencies got even stronger. And I think you're right. It's sort of burning away the garbage, so we can see really what we have here in terms of an alternative form of currency.
Indeed.
Javier David, thank you very much.
Thank you.